Board meeting. On tonight's agenda is 2.1, Finance, the review of audit results and presentation of the 2018-2019 Comprehensive Annual Financial Report by external auditor Burton Colder of Colder, Slavin and Company, LLC. Mr. Colder?
Before you is the complete CAFR, this green book, which has almost 200 pages of information in it. And what we've done is, instead of having to flip through this thing back and forth, we gave you what we call supplemental information, which has a clear cover to it, and it's only about 25 pages. So we've extracted some of the more important items for you that we felt were more important that we needed to mention. So does everybody have that before you? The clear covered says supplemental information on it. Okay. That being said, in the 200-page report, the opinion on the financial statements is indicated. You did receive a clean opinion on unqualified. It says it's really unmodified opinion, as it's called, but it is the best opinion that a CPA could give this government, and so we do have that in here. Included in the large book is all of the funds of the Lafayette Parish School Board, and it involves the one general fund, which we're going to go over, and there's 11 special revenue funds that are indicated in here. Most of the special revenue funds are federal government subsidized type of programs in which you spend the money and then you get reimbursed. So it pretty much is a wash. You have to spend it in compliance with what the grant agreements are. And then you have some debt service funds and some capital projects funds. You have 4 debt service and 6 capital projects. The reason I'm mentioning that is you have quite a few funds, like 22 funds to be exact, but the ones that you have more control over is the general fund, obviously, which can be used to spend on various programs and to support the school system. So that's the one that I'm going to focus on here today, and certainly at any time that we're going through this, if you have some questions that Mandy or myself might be able to answer, we'd certainly want to entertain those. That being said, let's look at the back part of the report, and I want to mention it's on pages 23 through 25. And these are our findings that we have included in the large report. As I said, all of these are extracted from the large report. You have this year, I'm happy to say that you only have 3 findings. It says 4, but one of them, like finding number 2019-002, is also the same as it's an internal control problem and a compliance problem. So it's listed in both, so it's really just 3 findings, of which the first one, 2019-001, it says there were inadequate controls over the funds collected for various fundraisers and activities at the individual schools. The school board should closely monitor these activities in order to ascertain that the policies and procedures are being adhered to and to take action regarding those not being properly followed. I think most of you are aware that you have of the 43 schools or so that this system has, that your staff of internal auditors for the school activity funds generally do approximately half of those, 21 to 22, 23 schools. The other 21, and we do them on a rotational basis, we do for you. We do the same type of testing that your staff does, but you don't have adequate staff to cover all the schools. So you're trying to cover them all in every year, and which has been a good situation. We've been doing this now, I think this was the 3rd year. But this finding, even though it has gotten better, it has not gotten to the point that we can take it off of here. And it's not as if your staff is not trying to do a good job in trying to enhance the policies and procedures so that you can control it better. You are doing that, but it's just not to the level of where we think it should be. The other 2 findings, finding number 2019-003 as an internal control finding, and also the compliance finding, which is listed as 2019-004, and that's on page 24. Both of these pertain to mainly eligibility and enrollment type reports relative to the early childhood program. And we had those issues in the past. We had more than this, but it's gotten better. We're down to 2 issues. And hopefully we can get these alleviated. I spoke with the superintendent about it, and she's of the opinion that we probably can. Whether some of it will spill over into this current fiscal year such that we won't be able to alleviate it this first year, or this current year, it remains to be seen. But I would hope that in a couple of years that you should be able to have this one eliminated, or these 2 eliminated. Any questions on these findings? Again, not a bad situation for this size system to only have 3 findings is definitely complementary to the system. Okay, that being said, let's get into some of the numbers, and why don't we look at page 2? I'm sorry, page 3 is the statement of revenues of the general fund. And this is, of course, just the general fund revenues. And you have the budgeted number, which is the final amended budget adopted by this body, the actual numbers, the variance to the budget, and then you have the 2018 actual numbers from last year. And you're going to see this in your total budgets. You're very, very close to budget. So I'm going to focus more on last year's and this year's, and let's look at the relationships and see if we can determine if there's any questions that may develop relative to that. Ad valorem taxes. Last year we were at 74.8 million. This year we're at 75.9 million. So an increase of approximately 1.1 million in ad valorem tax. I think for this year, Matt or Billy, I believe we're holding, I don't think we've seen a reduction nor a significant increase. I think it's pretty much flat. The sales tax revenues that went into the general fund, $72,600,000 last year. We're at $73,200,000 for the current year. Up about $600,000 over the prior year. That's pretty much flat. It's 0.8%, so it's not a significant increase. And I think in our exit meeting that we had, I think it was mentioned maybe a slight increase, but not much in his current fiscal year. Is that okay? Interest on interest-bearing deposits. Here you've had a good size increase because the rates have been better and the negotiation of the rate with Iberia Bank has been good. You went from 1.6 million of revenues last year in interest. This year in the general fund we're at 2.6 million. So we're up approximately $1 million. Rentals, leases, and royalties, $406,000 last year. We're at $472,000 for the current year. In other, your tuition for summer school, driver's ed, $420,000. Last year we're at $390,000 for the current year. Miscellaneous revenues, $688,000. This year $436,000. So total revenues from parish sources, $150.6 million last year. We're up by $2.5 million to $153,152,000 from parish sources. Now from state sources, we have the MFP, which is the State Public School Fund. That's $126 million last year, and that's $126 million for the current year. So up only about $300,000 on 120 some odd million. Revenue sharing was $2.2 million and last year, and it's $2.2 million this year. The PIPS program, this is continually going downward, $55,000, $45,000 for the current year. Non-public textbooks, this is the allocation to the non-public schools, $207,000 last year, and we're at $210,000 for the current year. Total for state sources, $128.3 million last year, very close this year at $128.6 million. Now, total state sources, as I said, was $128 million. Now, the federal grants, federal sources, $108,000 last year, $98,000 for the current year. Total revenues for the Lafayette Parish school system last year, $279 million in the general fund. This year we're up by $2.8 million to $281 million. And you can see the variance from budget, $1.8 million. That's very, very close. I think it's like a 1.6%. So it's extremely close there. Any questions here? Non-public textbooks. That's textbooks that we pay for that go to the private or parochial schools.
It's a grant. It's a pass-through grant that comes through the school district, and we basically we place the orders and spend on behalf of the parochial and private schools. We're sort of a fiscal agent.
Do they make a request, Billy? The private
Yes,
schools?
they make their needs known, and we basically place the orders here, and then receive the funds from the state on their behalf.
That's what I got you. Okay.
So, Billy, can you address the $1.4 million reduction from budget to actual for the MFP for 2019?
Yes, so the MFP starts, for example, fiscal year 21, we'll get an estimate in March. And that number will change. We'll get a revised estimate in June. And then after that, it may change month to month for various reasons. So ultimately, it's not as easy to project as it used to be, because there are adjustments running through the formula almost on a monthly basis for various, might be supplemental course allocation, it might be the CDF funds, things of that nature. So it's basically, we're doing the best we can to, get as close as we can to that final number.
Okay, any additional questions? Okay, if we would go to page 4, which would begin the expenditures for the general fund, and here we've had about 7 pages from 4 through 10, and it's broken out by the different areas and categories as dictated by the state. So if you look at any of the school district, it's going to be the same similar type of format, which follows the AFR type of format that they're requiring you to do it. And so let's look at this. I'm not going to read every item, but let's just look at the totals last year. Look how close this is, $106,459,000 in expenditures at this category for regular programs, and this year we're at $106,378,000. And budget-wise, we're $552,000 below budget. One thing that you may want to look at is the very last line item in this category, allocation to charter schools. Last year was $11.5 million. This year is $12,936,000. So that's what went over to the charter schools because of based on the number of students that are in those charter schools. And Billy, we don't get that money. Am I correct? Is that the state tells you how much they've sent to those schools, correct?
Yes, that's correct.
Yeah.
Yeah.
And then we record it as gross amount, and then we record the expense that went to the allocation to the charters.
Yes, and Dr. Aguilar, that's another number that's running through that 127 million that we're trying to estimate. So that's another one of the reasons why what we were off on our budget projection.
Okay, on special education programs, again, this one is very close as well. You can see it's made up of teachers, aides, substitutes, purchase services, and so on, and then employee benefits are in here as well. It was $29,544,000 last year. We're at $30,119,000 this year, and we're within $10,000 of the budget, which was $30,130,000. So very, very close in this particular area. Next category on page 5 is vocational ed programs. Again, this one very close to last year. It was $4,661,000 in total last year. Again, teachers, employee benefits, purchase services. That area did go up from $60,000 to $630,000. But you have other areas like textbooks, as you can see, was $900,000 last year, nothing this year in this particular area. But in total, it was $4,661,000 versus $4,823,000, and again, $104,000 below budget. Other instructional programs budgeted $5,460,000, actually spent $5,852,000, $391,000 more than what was anticipated at this level. You can see the bulk of it is in the teachers, or all of it is in the teachers, $397,000 more than what was originally in that budget area. And last year, we spent, in this category, $7,056,000. You can see purchase services was a big item last year, went down to $200,000 for the current year. And salaries did go down from $3.8 million to $3.3 million. I think some of this is the shuffling of some of the instructional people from one category to another. Okay, on page 6 is the special programs. You have, last year we spent $8,407,000, and this year we spent $8,885,000 within $12,000 of budget. The big item here, you look at the teachers in this category, went up from $3.8 million to $4.3 million. So you had a decrease in the previous one, I think it was vocational, and now it's you see an increase in special. And I'm sorry, the other one was other instructional, and you see the increase in this one. Total support services or pupil support services, last year we spent $20,996,000. This year we spent $19,848,000. The big item here that of the reduction, if you look again at purchased services, $1,207,000 last year, down to $155,000 for the current year. So a decrease in total by $1.1 million. Next page is instructional staff support. And you can see here this total category last year was $6,738,000. This year we're at $10,180,000. I made a note on this that a lot of this or some of this was moved over to other instructional. Again, a reclassification. Big item is in instruction / curriculum specialist. $883,000 last year, went to $2.9 million this year. Of course, the budget reflects it. But in total, on the $10.2 million of actual expenditures, you were within $66,000 of budget. Now, for general administration, it begins on page 7, and here's where the board members are charged, the superintendent's charged, clerical, legal services, audit services, and so on. And it concludes on the next page. Was $4,972,000 in total expenditures last year, went up to $6,014,000 for the current year. The biggest item, if you look back on page 7, is in the judgments, and the claims there was $437,000 last year. It's $1,424,000 this year, in judgments that were settled and paid. Back to page 8 for school administration. We spent $20,788,000 last year. We spent $18,451,000 for the current year. Again, this one went down from the previous year, and you were very close to budget, $145,000 to be exact, under budget. Now, business services, beginning with fiscal services, and you have all of that laid out here, and it begins on page 8, concludes on page 9. This one is extremely close to the prior year. It was $3,099,000 in the prior year, and it's $2,931,000 for the current year. Budget was $8,000 less than what we actually spent, so very, very close here. Operations and maintenance of plant. Budgeted to spend $27.7 million, actually spent $27,975,000, about $149,000 more than we thought. The majority of this difference is in, if you look at it, the first line item, or the last line item here, employee benefits. And last year we spent $22.9 million. One of the big items, if you look towards the middle of the page, purchased services. This is where the resource officers are charged. And of course, the increase went from $553,000 to $4,635,000. So an increase of about $4.1 million. And that's pretty much the increase that you've had from 23 to 27 million. All of that increase is resource. Yes, ma'am.
We do have, some of that would also include the HVAC contract with the third party that handles all of our HVAC maintenance. We added, we air conditioned 18 gyms and built new schools in the last couple of years. Some of it's coming up off of warranty, So all of that impacts the HVAC contract. That's also in that number.
Okay, beginning on the bottom of page 9, the student transportation services, and it concludes on page 10. In total, last year we spent $16.1 million. This year we spent $17.2 million. There's a few items that did go up. Of course, the employee benefits went up about $300,000, and if you look up, the gasoline diesel went up about $200,000, and bus driver leases went up about $100 and some odd thousand. So there's a few items here that did increase, and that's why that in total it increased from the prior year. It is within $355,000 difference from the budget. Now, the next category is central services. And here we budgeted $5.6 million. We spent $5.2 million, $379,000 less than we anticipated. And last year we spent $7.3 million. The big change here is in materials and supplies. And last year we had $2.2 million of the Chromebooks that we had purchased last year, which we didn't have that much this year. And looking at the very last line item, total expenditures for the general fund, you budgeted, or this body budgeted to spend in the final amended budget, $264,359,000. Actually spent less than that, $264,062,000. And that's $297,000 less than what we anticipated. This is extremely close. Yeah, it's $300,000, but it's on almost $300 million. And last year was $259,334. So. Again, we've looked at the details. Are there any questions on pages 4 through 10? Hearing none, let's look at page 2. I'll go back to page 2 because we've looked at all the details of both the revenues and the expenditures. Page 2 will give you a snapshot of the operations, or an income statement, so to speak, or statement of revenues and expenditures for last year, as well as it shows this year's original budget, final budget that was amended, and the actual numbers that we just went over, and in the variance, and then of course last year's total numbers. Just looking at it, total revenues, as you can see, you budgeted to receive $283,709,000, actually brought in $281,841,000, $1.8 million less than we anticipated, and the majority of this is in the state sources, as Dr. Aguilar had just asked that question, and I think Billy answered it relative to the estimate on that. And it's only 0.6% under where we had thought it was going to be. So it's, even though it's almost $2 million, it's 0.6%. You have a 5% variance is what's allowed by state statute. 2018, we received $279,048,000. Middle of the page, you have total expenditures. We just looked at the details. You have all the different captions that we talked about. $264,359,000 was the final amended budget. It actually came in at $264,062,000. We're $297,000 below budget. That's a 0.1% variance. That is extremely, extremely close. Last year we spent $259,334,000. Excess of revenues over expenditures. At this line item, you had anticipated it being $19.3 million, came in at $17.8 million, $1,580,000 less than what we had anticipated. The majority of this, as I said, is in the state sources. Last year we had a $19,700,000 excess at this line item. Now, from that, you transfer monies out to some of the other funds. And last year we had an extensive, or quite a bit of a transfer. It was $42 million net transfer. It was $25 million more than what it normally would have been, which we transferred into capital, and that was the plan there. And so you left with, as you can see on the far right, the excess. In this case, was a deficiency of $22 million. And what happened, if you recall, you changed the amount of fund balance that you wanted to retain from 90 days to 75 days. And we used that money that went into capital. That $25 million was transferred to capital. You're still within your self-imposed fund balance level, which we'll look at in just a minute. So if I would add back the $25 million to last year that we wouldn't have transferred, we'd have had about a $3 million surplus. This year, if you look at it, our surplus is $3.7 million. and we did our normal transfers, no extra transfers. Your total reserves in the general fund went from $60,678,000 plus the $3.7 million of surplus in the general fund. We ended up with a fund balance or reserve in our general fund of $64.4 million. So we're in pretty good shape there. Any questions? Okay, hearing none, let's look at the just some analysis of the general fund, and that's going to begin on page 11. Again, it just gives you some ideas of where we've been. This is pretty small because it's got 4 years of history. I'm not going to go through each one of them. It's got it. We even have an average per pupil, how much we're bringing in, how much we're spending. I'm going to just look at the very last line item, and you can see the excess or deficiency for each one of the years. You can see way back in 16, we had a $2.7 million surplus, about $91 per pupil. In 2017, we were at $2,574,000, about $87 per pupil. In 2018, we just looked at it after we transferred out $25 million, we showed a big deficit of $22,691,000, but we transferred those monies into capital projects. So it was a $741 net deficiency per pupil for that year. This year we're at $3.7 million, about $119 per pupil that we set aside for future use in our fund balance. So again, got a lot of activity on here, but I just wanted to make the point so you can see your analogies and your comparisons. Page 12, just to give you an idea of how much we spend or how much this system spends on salaries and benefits. And we have, again, 4 years of history here, but you're spending about 80 or 81 cents if you look at it the first year in 19, 212 million on salaries and employee benefits. This is in all the funds or all the different departments of the general fund. 81 cents per dollar. Last year was 81 cents. The year before that was 81.9 cents or 82 cents, and in 16 it was 84 cents. And then so we have about 20 cents that we can play with, but we really, a lot of this is fixed. If you look at it, you have instructional materials and supplies. You're spending about 3.5 cents on that. On repairs and maintenance, 2.6 cents. Utilities and telephone, 2.5 cents. Contracted services, about 3 cents. Insurance, of course, 0.8. Appropriations to charter schools, we're spending about 5% on this. And so if I add the amounts on the charter schools and the personnel expenses, you're spending about 85 cents on every general fund dollar that you receive on those particular items, salaries and employee benefits and charter schools.
Do the charter schools get the same amount per pupil?
Billy, do they? Do you know if the charter schools are allocated the same amount per pupil as what it would be if they were in this system?
Yes.
It's just that it's the whole parish calculation, right?
Yes, it's
okay.
both the state. One thing to note is the amount that's showing here as appropriation charter school, that's the local portion, local share. So
Yeah.
there's a state share, which is the MFP.
Right.
And there's a local share, which is all of the property taxes, sales taxes, local funds that are generated. So the way they have us account for it is in the revenue section, they send 100% of the state share and deduct the amount that goes to the charter schools in the revenue section. So it doesn't show up in this 12 million number. If it
Okay.
would, that number would be about 18.5 million.
Okay.
That's going
Wow.
to charter schools. But this portion is the local portion, and the same dollar amount is allocated to the charter schools, to answer your question.
Thank you.
So Billy, if the students at the charter schools were in this system, we would show $18 million approximately of revenue.
Correct. We'd have an additional 18
Or
million.
reduction of expense, whatever way you want to look at it. Am I correct with
We'd have
that?
an additional 18 million of funding available for
For budget.
race.
Yeah.
Yep.
Virtual charter schools get the same amount as the charter schools that have our students. Virtual charter schools that have no buildings,
Right.
no libraries.
They still get $8,900 per student.
Get $9,300
Okay,
Same as a regular.
okay,
But the thing about it, though, Katie, is that our fixed cost,
right.
maintenance and all that, it's still the same. Whether we had these X number of students or we don't have them, it's still the same fixed cost. We could do it and realize a lot of that would drop to the bottom line, so to speak.
Okay.
So, okay, any other questions?
I have one more. I know that there's some remaining funds for Southside that we're obviously discussing. Where is that reflected? I know that's not our funding, obviously, that's a grant, but where is that reflected? I didn't see it.
Project fund in the big report.
So it's into the
Yes.
construction line?
It's
Okay.
It's not in general.
Because it was USDA funding.
Yep.
Very separate.
Yep.
It's purified, so we have to know exactly where that money goes. That's in a separate bank account, separate fund.
Okay.
We understand how these counts.
Page
Thank you.
114 of the big report.
114 of the big report.
Thank you.
Okay, just to, page 13 will give you the breakdown of the fund balance in the general fund, and there's certain restrictions on it, so to speak. Non-spendable is about $1.6 million. Specific purposes is minimal. It's about $34,000. Committed, which is for economic stabilization, and also another $600,000 for the workers' comp. But the stabilization, as I indicated, we'll look at that computation in just a moment, but it's $56 million, which is what the school board has set aside, or as their benchmark that they want to keep as, so to speak, a cushion. And assigned loss contingency, LD consortium, and subsequent years' expenditures. The subsequent years' expenditures are purchase orders that have been issued, so the money's been somewhat spoken for, and that's why it's listed as 3.3 million of subsequent years' expenditures. So total assigned was $2.5 million last year, and it's $4.6 million. Unassigned is $1.3 million, and last year was $477,000. This makes up that total of $64 million that we spoke about earlier. If you look at page 14, it'll give you the computation of how that stabilization is computed. We take or your staff takes the general fund final budgeted expenditures of $269,881,000. And the stabilization percentage is 20%. Well, that's 2.5 months of operations. It's 75 days. And so this is how the $56 million was arrived at, $56,225,000. Any questions on these items relative to the general fund?
If you're looking at the south side, I don't know, you had pulled it up.
Yeah.
It's only showing $16,000 in that account. That's because the money hasn't been requested. It's a reimbursement
Okay.
from USDA, so that's why the money's not in there. So if you're only seeing $16,000, that's just right.
One question that might be for the administration, not so much. The reduction in bus aids, was there a reasoning why we did that? Did some of those get moved to special education, or is there a reason why there was such a huge reduction in that
Well-
number?
Well, with regards to special ed, that's pretty much mandated, so that the decrease is not there. Where we've seen over the years, about 5 years ago, we started having regular ed aids on buses to address distance problems. And in the past couple of years, with the addition of cameras on buses, it's eliminated the need for some of those regular ed assistance that had been added over the past 5 years.
Okay,
So it's
thank you.
reflective of the cameras that we put on the buses.
Okay, thank you.
Okay, if there's no further questions on these areas, let's look at page 17 of the supplemental information. And this is the group self-insurance fund. It's an internal service fund where you collect premiums, both from the general fund and from some of the employees who are part of the program, and that shows up as revenue, so to speak, and charges for services. Then we have the operational expenses on this particular fund, and so on. So let's look at this. Charges for services, as I said, coming from the general fund as well as from the participants in the program, from withholdings and payroll. Charges for services last year, 55.7 million or 55.8 million. This year, 56.8 million. So it's up about $1 million. But the expenditures, contractual services, 3.1 million versus 3,263,000. The premium payments that you're paying, 2,580,000 versus 2,775,000. The claims payment went from 48.8 million of medical claims to 51.3 million, and then other operating is extremely close at 710,000 versus 712,000. So total operating expenses last year 55.2 million, this year 58.1 million. Operating income last year was $576,000 of income. This year it's $1,292,000. The interest earned on interest-bearing deposits was $157,000 versus $289,000. Now the next item is this OPEB expense, and this is actuarially computed, and you can see the big number from last year. You might say, what happened there? Well, that's a change in accounting. So what they were allowing you to do prior to 18 was to go ahead and amortize some of the costs that had not been accumulated and paid, paid in the prior years. They made you go ahead or they allowed you to go ahead and take it over like 30 years. Well, come 18, they said, no, we want you to put it all on the books. So we had to pick it up, or you had to pick it up, as it's $155 million. So, it's a huge distortion here that shows that you had a deficit of $154 million for that year. But the point remains is that the net position, the net actuarially computed net position of the group self-insurance fund is that for the students or for the teachers that are in the program and the estimate life expectancy, and that you have to provide them with health insurance, this is what's estimated at about $412 million last year, and it's $417 million to fund that for the future. So it needs to be recorded and identified in accordance with accounting principles and standards. What I put down at the bottom is the supplemental information. The OPEB service cost, which is actuarially computed and is based on the current employees and the life expectancies, that's an annual type of item, is 7.9 million versus 7.7 million. The bottom line net position of this fund, exclusive of this OPEB, because again, that's a forecast, so to speak, but it was 7,820,000 last year. We're at 6,817,000. That's really your true fund balance that you have, exclusive of this future obligation that you're required to put on your books. So I just wanted to point out, we had a loss this year, or you had a loss this year of $1 million in this group health fund. Any questions here? All right, hearing none, we were just going to do some other comparisons, which we've done in the past, and I'm going to go with page 19. And we're going to give you a comparison of Lafayette Parish to Calcasieu and St. Tammany. They're close in size to this system, and we've always done this. But I'm not going to go through all of these numbers. You have a consolidated Lafayette Parish as of June of 19. This is your statement of position. This is all items relative to the Lafayette Parish School Board. You can see the total net position down at the very last line item is $417 million. But the majority of this is due to this pension liability that you're required to put on your books, and also your other post-employment benefits that we just looked at. If you look towards the middle of the page on the liabilities, other post-employment is $417 million, and pension liability, which is state pension plans, is $358 million. So we had $700 and some odd million that's being shown as a liability on the books, and that creates your big deficit. I don't want to get into all of this, but I just want to show you that, yeah, it's a huge number, but look at the comparison to Calcasieu. Their unrestricted deficit is $972 million, and the one for St. Tammany is at $721 million. And just to show you, yeah, it's huge numbers, but it's huge numbers for theirs, but relative to theirs, we're quite a bit less than where they are. And again, these are some actuarially computed numbers. So just wanted to point that out. Beginning on page 20 is, and this is something that you can relate to, and we had, I apologize for it being pretty small, but that's the only way we can fit it on a page. This is the revenue streams from Lafayette Parish, Calcasieu Parish, St. Tammany Parish, and we also break it out for you on a per pupil basis as to where the funding's coming from and so on. And in the next few pages on 21 through 22, I think we are just 21, we're going to look at the expenditures. So let's look at this, and you have 19 numbers in the first three columns, and then the 18 numbers on the last three columns on the far right. Lafayette Parish sources, we're bringing in $5,703 per pupil. You look at that. Calcasieu's bringing in $6,825 from the parish sources, and St. Tammany is at $5,596. I think it was like 3 years ago, if I'm not mistaken, is when Calcasieu passed another sales tax, and that boosted their revenues dramatically. And of course, there's a lot of activity going on there with construction, so that's also boosting their activity. From the state sources, but look at this, we're at $4,089 in 2019 per pupil. Calcasieu's at $4,343, so they're getting about $250 more per pupil than we are. Look at St. Tammany, $5,528, so they're getting $1,500 per pupil from the state sources, more than Lafayette Parish gets. Total general fund revenues per pupil, we're getting $9,795. Calcasieu's at $11,170, and St. Tammany is very close to that at $11,139. And it's all relative for the prior year as well. Just looking at it, down at the bottom, we've got some other statistics for you. Ad valorem millage, ours is 33.56. Calcasieu's at 17.23, and St. Tammany's higher than Lafayette Parish at 48.51. The approximate sales tax rate, that includes the 2002 sales tax as well. We're at 2%, Calcasieu's at 2.5%, and St. Tammany's at 2%. Outstanding debt, Lafayette Parish, we're at $258,600,000, and Calcasieu's at $176 million, and St. Tammany's pretty much the same as Lafayette at $258 million in debt. And you can see just above that the fund equity. We just looked at the general fund equity. Here we're at $64.4 million. Calcasieu's at $101 million, and St. Tammany's at $115 million. So St. Tammany's been outpacing us because they get so much more money from the state than Lafayette Parish does. Number of pupils, number of schools is all identified there. We're at 43 schools, 31,400 pupils. Calcasieu's at 59 schools, 32,900 pupils, and St. Tammany's kind of right in between that. They're at 56 schools with 38,500 pupils. Populations of the parish are all identified, St. Tammany being the biggest of the three, Lafayette being number 2, and Calcasieu being the third at 203,000 population. Any questions here? Again, there's a lot of data here, but just to give you an idea of how we compare to some of the comparable school systems, and this is right off of their audit reports, just like we've taken it off of ours here. Lafayette Parish on page 21, the expenditures, how was the money spent? How much are we spending per pupil? And what percentage, as you can see. Per pupil, Lafayette Parish on instruction and student-related services. Total there was $5,795 per pupil, 63%. Calcasieu's at $6,876, about $1,100 more than Lafayette Parish, but they're still at 62%. And St. Tammany, St. Tammany's at $6,589 per pupil, and they're at 62%. So we're very comparable on the percentages, just the dollars are a little different. The total direct student-related expenditures, Lafayette Parish spent $2,981, Calcasieu $3,692, and St. Tammany is at $3,477 per pupil, all in the 32 to 33.5% range of the total. Total student expenditures, Lafayette Parish spent $8,776, 95% is on student and student-related services. Calcasieu $10,568, and St. Tammany is at $10,066. Calcasieu is at 96%, St. Tammany is at 95.13%, very close to, all three of them are very close as far as percentages. Now, the total expenditures that you're spending on other support services, which is general administration, business services, central services, and community service programs, $454 per pupil in Lafayette, $411 in Calcasieu, and $515 in St. Tammany. Percentages, we're at 4.9, Calcasieu 3.7, and St. Tammany's at 4.7. All of these are relative if you look across for the prior year as well. Total general fund expenditures, this system spent $9,230 in the general fund per pupil. Calcasieu spent about $1,700 more per pupil on the 30-some-odd thousand pupils that they have. They spent $10,979, and St. Tammany is very close to Calcasieu at $10,581. So we get less money, so we can only spend less money on our pupils. Okay, I don't think I have anything else. Is there one other thing? On page 22, let me just point this out. We want to look and see, this is an analogy of the fund balance that's available that each system has. And you see that towards the bottom of the page, we have the approximate number of months. You have 2.6 months, and that's pretty much what your benchmark is. You had 78 days of available reserve. Calcasieu is at 1.7 months, or 51 days. In 2019, they were at 42 days in 18, but they're continually going up because they're realizing surpluses. St. Tammany was at 96, and they were at 102 days. Again, the benchmark, it should be at least 60 days. You're right above that, you're at 75 days, which is what your internal policy or your board mandated policy is, basically 75 days. You're slightly above that at 78. I just wanted to point that out. Better than Calcasieu, but less than St. Tammany. But I suspect within the next, I'm going to say a couple of 3 years, Calcasieu is going to exceed Lafayette because of the surpluses that they're generating with the extra revenues.
I have a question. The community service programs that St. Tammany's spending 1.3 on, and we're only spending like 104,000. What is all encompassed in that?
Community service. Yeah. But what makes those items?
I believe part of that might be like grandparents program where we fund their meals for their volunteer in return for them volunteering to read to the students, things of that nature. So things along that line.
Okay.
I'm not sure with regards to St. Tammany Parish why their numbers.
Yeah, it's just a huge variance between our number, Calcasieu's number, and St. Tammany. I was just curious at why, what was all encompassed in that?
Yeah, I'm not sure what program
That's all the purchase services.
is in St. Tammany Parish that would account for the difference. Another area for us, in addition to the one that I mentioned, is we pay for a pro rata share of any improvements to the computer system, the tax assessor's office. That's another. Those two items there are probably the majority of what we're spending our funds on. I can research the St. Tammany and get y'all some information on that. What makes up their 1.3 million?
On Lafayette Parish on page 10, Billy, all we have in here is purchase services for the 104,000. So it's probably what you said. It's 4H? Okay. Okay, because it's just purchase services. And it's pretty much identical to what it was last year. It was 104,478 this year, and it was 104,480 last year. So apparently just a contract that we have for the 4-H. Why St. Tammany is so high, Billy? Again, you'd have to look at it and see. I have no idea. I know that Calcasieu is very low. It's lower than ours. It's only, what, 37,000? Yep. You would think so.
They might account for it in a different line
Yeah.
item. They might put it in a different.
The community services, the state of what they want to put there is kind of a catch-all. So if somebody's being
Yeah.
We may have the same program, put in another place, and move on.
Any additional questions? Thank you, Britt. We appreciate it and appreciate the business for the school system. As always, if you should have any questions that we can help with, we certainly want to try and entertain those.
Thank you, Ms. Colder. So no more board comments or questions? Any questions from the public? Hearing none, this special board meeting is adjourned. Our regular board meeting will start at 5:30. Thank you.